What's poppin', guys? This is Thick Teddy, obviously, and today I want to talk about entries and exits. I think it's something that a lot of people kind of struggle with, as in they don't know how to time a entry and the least risk area, and they don't know how to time an exit at the most reward area. Oh, here's my cat. He's trying to be crazy. I'm gonna put him on my stomach here. But the biggest thing I want to talk about today mostly is entries because if you can get a good entry, then the exit kind of will help itself, if you know what I mean. So obviously I have the SPY chart up. This is actually the SPY chart from right now. It's right after I got off stream. It's 10:20 where I'm at on the 6th of July, which is today. I'm going to be uploading this later. And the first thing I want to talk about is this top supply zone. This makes it really easy to time an entry where you should. And I mean, obviously, we could delete that and make it a horizontal line. You can either do it at the top of the wicks, at the top of the bodies of the supply zone, and or both. Um, so when we're talking about getting an entry exactly where we want it, we're talking about the place that has the most upside with the least downside. I know a lot of you guys probably think of entries as whenever the setup is there, I need to take it. That's a setup. That's probably a B level. That's probably a B plus level even. But to get an A plus level setup, you need to be taking with the least amount of risk and most amount of reward, like I said. So where is that? If you're looking to go short, you need to be in a supply zone or at a key level. So in this yellow zone or at one of those black lines, like I had earlier. Um, what that would mean is if it breaks through, that black line or this supply zone, then you can exit with the minimal amount of damage. You can get a paper cut instead of, buying in all the way down here and then being out all the way up here. And we're going to talk about something else today as well. We're going to talk about, maybe starting to buy like one contract and then adding the size of your position at the most reward, least risk area, aka inside of one of these zones. So if I'm, wanting to play, which actually we can talk about a play that I did play today. I played this candle here, this retest of this 9 EMA, and I actually bought a few contracts at the 9 EMA, which I know if you have a smaller account, maybe you can only buy one at the 9 EMA. But I knew that I wanted it at the 9 EMA and this zone were the two risk areas that were probably the best for my risk reward. And so when we had the 9 EMA, I was like, all right, I'll start here. I started on the 9 EMA. And then when we got all the way up to into this supply, the supply is the best place to add. If it comes up to the supply, all right, if it breaks through this, then I'm out for a very, very small loss. If it busts back down, then I'm in the money. So then when it started to push into this supply, I added probably about double the shares I had added on the 9 EMA. And then when it even got into supply towards the top of supply, I added even more. So that's where you know exactly where you're at. You know exactly, all right, the risk is so defined here that it's not even a question in my head. There's no question on, should I hold? Should I exit? No, it's if it breaks through the supply, I'm out. I'm out for probably a small 5 to 10% loss. If it breaks back down and I'm in the money, then I know that I'm going to sell once I get to 5-10%. That's just how that works. That's just, I like to look at it as I'm going to sell if I'm, up 5-10%. I'm going to stop out if it breaks through the risk level that I have to find. So you take some on the 9 EMA, you take some on the supply zone here, in the supply zone, at the bottom of the supply zone, at the top of the supply zone. Those are your two levels. Um, so you have very, very clear risk there. There's no need to pity patter around about, oh, well, this setup could be a rising. No, if it breaks through the supply, it breaks through the supply. Just like if it were to break through a flag in the opposite direction of where you think it's going to go, then you get out. So then if we're looking at exits on this would be Obviously the first exit is probably somewhere, I'm going to put a black line, probably somewhere in this zone. It breaks through and you get a chance and then you have to exit here. But then the other exit would be, oh, we're in the money and we're actually making money. We're green on the trade. Then the exit would be this demand zone. So obviously, you would have probably waited, and then you would have probably sold probably right here for that 5 to 10%, and then on this next candle for another probably up to 14% if you had gotten the right entries up here. Um, but the most reward is going to be in this demand zone because you don't know what's going to happen once it touches this demand zone. If it touches this demand zone, obviously we can see right here it bounces, and then now you're probably almost near back to even. If you're almost near back to even, the trade is not working in your favor. You gotta figure out a better way to trade. So the best way to trade is on the demand zone. As soon as it gets close to the demand zone, scale outs. A lot of people like to, this is a big debate in kind of the FinTwit community, is scale out on levels or scale out on percentage wise, just a fixed percentage. I like both. I like why can't you do both? Why can't you do fixed percentage and then let some ride into the demand zone? Because you can take half off here at 7% and then let some ride into the demand zone and be up 12% and take some off there. There's nothing wrong with that. Absolutely nothing wrong with that. So I think that's probably the best way to go about it. You have your fixed sell, which is that 5, 8 maybe if you have a smaller account and you want some more risk to take on. Some people maybe 10%, whatever it is. Take a little bit though, between 5 and 10%. I recommend it. So 5%, I'd take it, and then the biggest part is letting that second part ride into the highest reward area. So the highest reward area is obviously the demand zone. We could remove these, like I said earlier, and we can put in, black lines. That's the beginning of the demand zone. This is kind of the bottom of the demand zone, maybe a little further down, maybe right in here is the bottom of the demand zone. So you're very obviously you're gonna be obviously taking that 5, 7, 8, 9, 10%, because that's what we do in this room. We take those small percentages while they're there. But don't shy away from holding that second half into the demand zone and maximizing your reward. I'll never hit on that. I'll never say that's a shitty strategy. I think taking some a little bit further. It's something I'm trying to work on too because I'm not a very risky trader. I'm a very conservative trader myself, especially with these day trades. So the biggest thing I can say is buying near resistance and selling near support on these setups. And setups will they'll kind of arise. Like if say I'm trying to think of something, maybe I can find one further back that could work for this. Oh, I know exactly what I can do here. Actually, no, this is perfect, actually. So this is from yesterday, and let's say I wanted to play this bull flag right here. We know that there's a supply which could be turning demand in this level right about here. So maximum reward, minimum risk. I want to give you guys a second to kind of think this one out before I start talking about it. But just think, I'm trying to play this kind of this bull flag, which honestly is not a perfect bull flag. I wouldn't have recommended playing it myself. But if I was to play it, where would my maximum reward, minimum risk be? Yeah. That's enough time. You guys could have paused it or whatever, but it is on this supply turned demand. It's the bottom of it would be the maximum reward, minimum risk. The top of it is obviously a place to scale in at. So you could scale in, at the beginning of this red candle here, and then you'd obviously have an opportunity to scale in at the bottom, and then you'd wait for that candle to close. If the candle closed below this demand zone, you'd obviously have to think, it's a different situation now. It's a different setup now. I need to reevaluate. But it closes back up in that demand zone with a nice wick, and you got a maximum reward, minimum risk add. I don't know how many contracts it would have been. It doesn't really matter how much it would have been. But if you could have added one at the top of this zone and one at the bottom of this zone, you would have been in the money by this candle close because your average would be right in about where my mouse is at. Let's put your average in there. Your average would have been right about there. You would have been in the money by the time that the candle closed, and then obviously up, I don't even know what that would have been, probably 15, 20, 25% at the top of this candle. But let's see if there's a spot where we can talk about the risk and where you would have needed to think about selling. I would say the risk level would have probably, the first one would have very clearly been right about there. The top of that, where it got stuffed down, and it's also a top on that first candle there, would have been the beginning of where you needed to sell, and probably the top of this wick. So when this green candle, obviously boners, probably sell the first part. You're probably up around five. You're probably up actually probably about 10% at the first sell. So maybe you sold some on this second green candle here, around 5% gain. And then right here, you're up 10%. And maybe you scale out a fourth at 10%. And then you scale out a fourth at the top of this wick at 18%. That's what I would recommend the most is, have your set lot or your set sell. Sorry, that's kind of a hard thing to say. Your set sell level percentage wise, and then the first one fourth after that first half. So basically, you're going to be selling. You're going to have 3/4 sold, but you're going to sell that first one half at a fixed level, and then the first one fourth. Somewhere around the beginning of the risk level, so that demand zone or that supply zone, based on what you can find via levels, and then that last one fourth can ride out until the top of those levels. The bottom of a demand zone or the top of a supply zone, depending on if you're playing short or long. It's just really important for you guys to minimize your risk on entries and maximize your reward on those entries, and then maximize the risk or maximize the reward again on your exits. I think, obviously black line levels will work if we were to remove this entire thing. You'd add as soon as it got near that black level, because black levels are obviously rubber bands. They're a little bit higher, a little bit lower than where they actually are, and they can move, they can shift. So you'd want to add, a little bit above that black line, and then be able to add a little bit below that black line, which works exactly the same way as a demand and supply zone, because the zone will have a top and a bottom. So whichever one feels more comfortable with you, whichever one you can kind of mentally visualize better, whether it's the zone which has the top and the bottom, or it's the black line that you're just thinking of as a rubber band that can move. It's a little bit pliable, but obviously we want everyone to understand. If you have any questions about buying at the bottom of a demand and then the break of it, which I think maybe that's something I need to talk about a bit more. So I'm gonna kind of just put up a demand zone that I can find here. So let's just say we're looking to play this demand zone right here. And it can go down a little further to the bottom of those wicks. So let's just say we're looking to play this demand zone right here. This is also from yesterday. So, we're in these. Actually, let's do this the opposite direction. Let's talk about we're going to play the supply zone, because that'll work for a bit better for what I want to talk about. So let's say we're looking to play this supply zone. And obviously, I'm trying to get this perfectly. And obviously, there's this is a chop zone here, and obviously we're looking, we're thinking, oh, this is a supply zone, which it's not, but we're just using it for kind of educational measures. We're looking to buy, bottom of this supply zone is our first scale in, top of this supply zone is our second scale in. So our average is right about here. This is a terrible candle to have happen to us. Obviously, it's a full dollar candle, but you're only going to be down 15, maybe 20% if you didn't quite get in, exactly where this black line is. If you were to be buying, say you're buying these red candles here. You're buying, oh shit, dude, this is perfect. Look at these candles. Look at this wick here. Look at how this candle closed. I'm going to buy down here. So somehow your average is all the way down. You think you're going to buy the breakouts. You think you're going to buy these wicks. So your average is all the way down here. Now you're down 30%. You're saving yourself that 10%, which, I mean, if you have $1,000 position in something, that 10% is $100. You're saving yourself $100 just by, scaling in the right area, even if it goes against you. So if this trade, obviously, this is worst case scenario. Most of the time, you're going to have a candle like, let's find another one that we can talk about quick. You're going to have a candle like this one. Say you thought like this was a supply zone. So you're going to play, geez, let me get this somehow to work. So you're going to play this in the supply zone. You're going to have a candle like this, where if your average is right here, you're down like 12%, something like that. This is the worst case that could possibly happen, an absolute boner candle against you. This, you're down 15 to 20%. This, you're down 30%. So there's really no kind of argument about which one is better and how you should go about scaling into things, because you definitely want to be scaling into things inside of the lowest risk, highest reward. Because the risk is just a break. This candle close, you're out, you exit, and then you don't have to deal with anything further than that. The reward would have been pretty big as well if it would have went for you. And if you were playing this, this demand zone here, then the reward would have been really nice. And if you would have played it, the way that I've been talking during this video, your average would have probably been somewhere right in this area. So 373.30, and the top of this candle would have been 375.07. But if you would have played it like we were talking in this video, you probably would have exited half somewhere in this area for 5%, and then somewhere a fourth here for 9%, and then another fourth somewhere up here for another, what is that? Probably 14, something like that. So I would say the biggest takeaways from this video are, just have a set plan before you get in. Know your supply zone, know where the first scale in is, know where the second scale in is, and just know where you want your average to be. You want your average to be in the demand zone if you're looking to see an upside move, or in the supply zone if you're looking to see a downside move. And if you're going to go black line, which that's actually how I trade during the day. I think it's just easier for me. If you're going to go black line, then first scale in needs to be right above it, second scale in right below it. Your average will be right around that black line, and then you'll be able to get the maximum move possible on your second half of scale outs, because the first half is going to be fixed. As in, that's my strategy. If you guys want to do it differently, then I honestly, it's your life, you're trading. Do what you want. Do what works best for you. But that second one half is really important, because then I can scale out based on the zones, and I don't have to really worry so much about taking profit immediately. And I've never really talked about scaling out that second one half based on zones, because I've always just kind of posted, oh, I took off another 1/4 at plus 10% or plus 11%, and no one's really kind of heard about how I actually am looking at the zones and thinking, okay, this is where resistance begins. Let's get out where the resistance begins, or this is where support begins. I need to get out of my puts where the support is. I don't want to be in these too long. I don't want to go, see a bounce and then I'm already, almost back to even. So I think that was kind of all I wanted to talk about on this video. If you guys have any questions, obviously, hit me up in the trading chat. I'll be around. I'm willing to answer stuff. But thank you guys for tuning in, and yeah, have a great day, guys. Peace.